Building wealth through real estate is one of the most powerful ways to achieve financial freedom. Many people assume that investing in real estate requires massive amounts of money, but the truth is that anyone can start with the right strategy and mindset. The goal is not just to buy property, but to create a portfolio of cash flowing assets that generate income, appreciate over time, and provide long-term financial security. Real estate is different from other investments because it allows you to use leverage. With stocks, you need the full amount to buy shares, but with real estate, you can control a valuable asset with a fraction of the money. This is how investors scale their portfolios and reach millions in net worth without needing millions in upfront cash. The first step to success in real estate is understanding the market. Not all locations are good for investment, and buying in the wrong area can lead to financial losses. It's important to focus on areas with strong job growth, population increases, and a high demand for rental properties. These factors help ensure that property values rise over time and that finding tenants will be easy. A common mistake new investors make is buying property based on emotions instead of numbers. A good investment property must make sense financially. The rent should cover all expenses, including mortgage payments, property taxes, maintenance, and insurance, while still leaving room for profit. One simple rule that investors use is the 1% rule. This means that the monthly rent should be at least 1% of the purchase price. If a house costs $200,000, the expected rent should be at least $2,000 per month. Once you find the right market, the next step is financing your investment. There are many ways to acquire property without using all your own money. Conventional loans require a 20% down payment, but there are other financing options such as FHA loans, hard money loans, seller financing, and private money lending. Many successful investors use a combination of these methods to scale quickly. One of the best ways to grow a real estate portfolio without constantly saving for new down payments is the BRRRR strategy. This stands for buy, rehab, rent, refinance, and repeat. Investors use this method to recycle their capital and acquire multiple properties using the same initial investment. The key to making BRRRR work is buying properties below market value, fixing them up to increase their worth, and then refinancing to pull out the equity. This strategy allows investors to continue purchasing properties while keeping their own money available for the next deal. When analyzing a property, it is important to factor in all expenses. Many first-time investors underestimate costs, leading to lower than expected profits. Property taxes, insurance, maintenance, repairs, and property management fees all reduce cash flow. It's important to run the numbers conservatively and prepare for unexpected expenses. Having a cash reserve for each property prevents financial stress when unexpected repairs arise. Once a property is purchased and rented out, managing tenants properly is crucial to long-term success. A good tenant will take care of the property, pay rent on time, and stay for years, reducing vacancy rates and turnover costs. Screening tenants carefully and setting clear lease agreements helps avoid problems. Some investors prefer to manage their properties themselves, while others hire property management companies to handle the work. A good property manager can help with tenant screening, rent collection, and maintenance, making real estate a more passive investment. As the portfolio grows, it becomes easier to scale. Appreciation and loan paydown increase net worth over time, and rental income creates financial stability. Some investors start with single-family homes and later transition to multifamily properties, such as duplexes, triplexes, or apartment buildings. Multifamily properties offer higher cash flow potential and lower vacancy risks since multiple units generate income. Scaling a real estate portfolio also involves using tax benefits strategically. One of the biggest advantages of real estate investing is depreciation, which allows investors to reduce taxable income while still making money. Additionally, a 1031 exchange allows investors to sell a property and reinvest the profits into another property without paying capital gains taxes, helping to grow wealth more efficiently. Many investors think that once they own a few properties, they have achieved financial success, but the real key to long-term wealth is continuously optimizing the portfolio. This means refinancing properties at the right time, upgrading units to increase rent, and selling underperforming properties to reinvest in better opportunities. Wealthy real estate investors treat their portfolios like businesses, constantly improving efficiency and profitability. Building a $2 million real estate portfolio takes time and patience, but with the right strategies, it can be achieved much faster than most people think. The key is starting early, using leverage wisely, reinvesting profits, and making smart financial decisions. Small steps, taken consistently over time, lead to significant financial growth. Real estate is not just about making money, it's about creating financial independence. Unlike a job where income stops when you stop working, rental properties continue generating income every month. With a well-structured portfolio, it's possible to achieve financial freedom and have the flexibility to travel, pursue passions, or spend more time with family. Success in real estate comes down to education and action. Many people spend years researching, but never take the first step. The most successful investors are those who learn the basics, take calculated risks, and adapt as they gain experience. The best way to succeed is to start small, learn from mistakes, and continually improve over time. If you're serious about real estate investing, the most important thing is to take action. Start researching markets, analyze deals, and explore financing options. The sooner you start, the sooner you can begin building wealth. Every property purchased is a step closer to financial freedom, and every mistake is a learning experience that makes future investments better. The real estate market is constantly evolving, and successful investors understand the importance of staying informed. Market conditions, interest rates, rental demand, and local economic trends all impact property values and profitability. Keeping up with industry trends and being adaptable is crucial for long-term success. Investors who fail to monitor changes in the market risk making poor investment decisions or missing out on lucrative opportunities. One major factor affecting real estate investments is interest rates. When interest rates are low, borrowing money to purchase property is cheaper, making it easier to expand a portfolio. However, when interest rates rise, the cost of financing increases, which can reduce cash flow and overall profitability. Investors should always consider how changes in interest rates will affect their ability to buy and hold properties. Locking in low fixed-rate mortgages can help mitigate the impact of future rate hikes and keep monthly payments predictable. Understanding the real estate cycle is another key aspect of investing. The market moves through different phases, including expansion, peak, contraction, and recovery. During an expansion phase, property values rise and demand for housing increases. This is a great time for investors to buy and hold properties for appreciation. When the market peaks, prices are at their highest, making it riskier to purchase property unless it still meets cash flow requirements. During a contraction or downturn, property values may decline, but this presents opportunities to acquire properties at a discount. Investors who buy during downturns and hold until the market recovers can see significant gains over time. Another powerful strategy for growing a real estate portfolio is utilizing partnerships and joint ventures. Many investors assume they need to fund every deal on their own, but partnerships allow individuals to pool resources, share risk, and access larger deals that might not be possible alone. A common partnership structure involves one investor providing the capital, while another handles the operational side of managing properties. By leveraging each other's strengths, partnerships can accelerate portfolio growth and create win-win situations. Real estate investors can also benefit from creative financing strategies. Traditional loans work well, but they are not the only option. Seller financing, lease options, and hard money loans provide alternative ways to acquire property with less upfront capital. Seller financing allows buyers to negotiate directly with property owners, often with more flexible terms than banks offer. Lease options enable investors to control a property and generate income while delaying the actual purchase. Hard money loans, although more expensive, can provide fast access to capital for fix and flip projects or short-term investment deals. Property renovations and value-add strategies play a critical role in increasing real estate wealth. Many investors look for properties that need improvements and add value through renovations. Upgrading kitchens, bathrooms, and curb appeal can significantly increase rental rates and property value. Strategic renovations also reduce long-term maintenance costs and attract higher quality tenants. However, it is essential to avoid over-improving a property beyond what the market demands, as this can lead to unnecessary expenses that do not provide a high return on investment. Short-term rentals and Airbnb investments have become increasingly popular in recent years. Many investors have found success renting properties on platforms like Airbnb and VRBO, generating significantly higher income than traditional long-term rentals. However, short-term rentals come with additional responsibilities, including property management, furnishing, and dealing with local regulations. Before jumping into this strategy, investors must research zoning laws, homeowner association rules, and market demand to ensure that short-term rentals are allowed and profitable in their target location. Investing in commercial real estate is another way to scale a portfolio beyond residential properties. While single-family homes and multifamily properties are excellent starting points, commercial properties such as office buildings, retail spaces, and industrial warehouses can provide higher income potential and long-term appreciation. Commercial leases often have longer terms, reducing tenant turnover and creating more stable cash flow. However, commercial real estate requires a deeper understanding of market trends, tenant demand, and financing options, making it a more advanced strategy. Real estate investors should always have an exit strategy in mind. Knowing when and how to sell a property is just as important as knowing when to buy. Some investors hold properties for decades, benefiting from appreciation and rental income, while others sell properties strategically to reinvest in better opportunities. The 1031 exchange is a valuable tool that allows investors to defer capital gains taxes by reinvesting proceeds from a sale into another property. This strategy enables investors to grow wealth tax efficiently while continuously upgrading their portfolio. One of the biggest challenges real estate investors face is balancing risk and reward. While real estate offers substantial opportunities for wealth creation, it is not without risks. Market downturns, tenant issues, property damage, and unexpected expenses can all impact an investor's bottom line. Mitigating these risks requires thorough research, careful financial planning, and maintaining sufficient reserves to cover emergencies. Experienced investors understand the importance of diversification, not only within real estate markets, but also across different asset types to protect against downturns in any one sector. Networking and mentorship can also play a significant role in real estate success. Learning from experienced investors, attending real estate conferences, and joining investment groups can provide valuable insights, potential partnerships, and access to exclusive deals. Surrounding yourself with like-minded individuals who share a commitment to financial growth can accelerate success and provide opportunities that might not be available otherwise. Investors should also stay up to date with legal and regulatory changes that could impact real estate. Laws regarding landlord-tenant relationships, eviction processes, tax codes, and zoning regulations vary by location and can change over time. Staying informed about legal requirements helps investors avoid costly mistakes and ensures compliance with local rules. The future of real estate investing continues to evolve with technology. Online platforms now make it easier than ever to research properties, analyze deals, and manage rental portfolios. Tools like real estate crowdfunding platforms allow investors to buy into commercial properties or development projects with lower capital requirements. Smart home technology is also becoming more common in rental properties, allowing landlords to improve security, reduce energy costs, and enhance tenant satisfaction. Investors who embrace technology gain a competitive edge in managing and growing their portfolios. While many people view real estate as a way to build wealth for themselves, it can also be a tool for creating generational wealth. Real estate assets can be passed down to future generations, providing financial security and stability for family members. Investors who develop a long-term plan for managing and transferring their real estate assets ensure that their wealth continues growing beyond their lifetime. Setting up trusts, structuring property ownership correctly, and educating heirs about financial responsibility are all essential steps for preserving wealth across generations. Ultimately, success in real estate investing comes down to a combination of knowledge, action, and perseverance. Many people hesitate to invest because they fear making mistakes, but the most successful investors are those who learn from their experiences and keep moving forward. The real estate market will always have ups and downs, but those who remain consistent, make smart financial decisions, and adapt to changing conditions will continue to build wealth over time. For anyone serious about achieving financial independence through real estate, the most important thing is to get started. The earlier you begin, the more time you have to benefit from appreciation, loan paydown, and passive income. Whether you start with a single rental property, a house hack, or a commercial investment, every step taken brings you closer to financial freedom. Thank you for watching. If you found this video helpful, be sure to like, subscribe, and leave a comment with your thoughts. What's your biggest real estate goal? Let me know below, and I'll see you in the next video.